back to another video, guys. This video is going to be about ranges and how we can use them, how we understand them in the market. Now, just to give you a bit of context on this bit of price action, if we zoom out and look on the daily chart, we can see we've got this whole high time frame range, this demand range where price has come back into this. We get this change of character back bullish, so we can now start looking for long positions and expect higher prices. So here we are. Now, price after taking out the high over there is in a pullback phase, and we now obviously are waiting for price to show us some bullish intent, maybe get a change of character back bullish, and then we can look to start capitalizing on the ranges to essentially take out the next high. Now, first of all, we can understand that prices come back into this refined range down here, which is left unmitigated, and prices now, we get now this change of character back bullish. Now, first we can mark this range. So this is our range here. Price initiates out of the range, comes back into the range, and creates this new range here where price is now taken the high of that and initiated higher. Cool. Now the objective is to be taken out this high. That's the objective. Now, to my understanding, we're going to be creating ranges, stacking orders to initiate higher prices, and creating another range, initiating, coming back into the range to mitigate, etc. So as we can see, we've made this range, we've come up, we've come back into this range, now we've initiated higher. Now we get this happen. Now we get this range created and broken out of. And then price comes back in and again initiates higher. So now we have this new range. Now, what I used to do a long time ago is I would see this unmitigated range down here and I'd think price has got to come back in to mitigate this to continue higher. You know, we've got equal lows there. You know, it's got to come back into here. Well, this is where I was missing out on everything because it doesn't make any sense for them to take out their most recent range. You know, we got buy orders, we're initiating higher. Until our objective of the high is taken out, logically, there's no reason why they're going to be taking out their most recent range. So when I understood that, yeah, I was sitting here thinking price has got to come back. That's when I realized, that's when I started capitalizing on all these recent ranges, you know, and it really does change everything. Okay, so now price comes back down into this range after it initiated out of. The high is taken, cool. We now have a new range. Now price is coming back into these type of areas. Obviously, if our hard time frame narrative is correct and we're on the right side of the market, this is just a reaction point for them to sell back into more buys. which we react, and these now supply ranges are holding. So now we can see that these supply ranges are just used to sell back into this unmitigated recent range. Okay, range, range. Sorry, these are our supply ranges now. Now we're selling back into our most recent range, and what happens? Price initiates higher. Now we have this range here. This is now our last range, our last demand range now to make higher prices. Price doesn't come back into there, leaves it unmitigated. But now we have a new range. We're still respecting every single recent range until, our high is taken out, our objective complete. So what happens? We get equal highs. Price comes back into this last range. And what happens? Objective complete, the highs taken. Now we have this range here. And to our surprise, the range gets taken out. So now their objective complete. They've done what they wanted to do. They've grabbed the liquidity above that high. Now, this is important as well to understand our hard time frame narrative that, we wanted to make higher prices and we're with the trend because, look at this. This is horrible. We don't want to be, in this. You see how these all get respected and then you get this. So price now comes back down into this range that was unmitigated, which was left for a reason for this to happen, for them to sell back into the unmitigated range, stack more buy orders, and continue higher. Now, again, range created, our most recent range. What happens? We come back into that range and off we go, and more than likely there's a range to the left that was left unmitigated for this reason. Now, something me and Sam used to do all the time is when backtesting, just put a horizontal line and look left and see what it reacted from. Because this is how we got to the stage of refining our POIs to, ridiculously small areas because we've done this thousands of times and look what happens. Prices come into this range here. As we can see, we get this low, this high. When price comes back into this last point of demand, we're expecting to see higher prices. But we get the initial reaction and then the low gets taken. So this essentially now is this whole range here is our demand to supply range. Okay, so this is where the flip happens. Also, we have uh, OB order block price delivery. So we get that aggression up, taking out liquidity here, and the V-shape recovery straight down. So this is what we're looking for anyway. So, everyone in time will have this already marked as a POI. It's got everything here, and it so happens to have this unmitigated range within that. We get the reaction. Okay, nice bit of inducement there. Reaction. And we get the change of character back bearish. Like I say, this was just going to be an understanding of how we read ranges and how we can capitalize on them. Me and Sam will be doing, Zoom calls with the team, and we want to dive more into detail when we do the Zooms because, there's going to be questions asked. We can go more into detail like that. Um, we think people can learn a lot better like that. So this was just a video to just give you a little summary of that. But I do also want to dive into a bit of recent price action as well because it's important to understand. Now, we can see this bit of price action here. Obviously, we was talking about ranges back then, and I just want to talk more about like sideways ranges or um, consolidation, if you want to call it that. Essentially, it's just um, accumulation and distribution. So, um, if we, zoom out like this, again, we can see we have this whole range here, very similar to what we was just looking at a minute ago. Okay, if we want to get more refined, we can say that this range here is again our last point of supply fails, turns into demand. Now, when seeing this, we're in a bullish market, we are expecting the high to go. Okay, objective is high to go, which it doesn't. So we can now identify, that we are in a range. Okay, and how do we identify that we are in a range? Well, a high is taken, a low is taken, and then we are contained within two levels, a high and a low. So we are now contained between here and here. And the only time when we actually can identify that is when this happens over here. Price comes down, this leg we're expecting to take the high, but soon as we get this range here fail, obviously expecting this range to be the last range to take this high. Well, we don't get that, so then we are now between 2 points. We've got weak highs and weak lows. And as soon as we can identify that, we need to get our fib tool out. And we want to only be trading in the top and bottom third. Okay? All this in here, we want to stay away from. This happens time and time again, obviously. And as we can see, these are just the best areas to trade from. There's no commitment. We don't know now whether price is going to take the highs or price is going to take the lows. So we just want to be trading from the edges. And obviously, once we identify this here, we can see that we have price comes up into here. We can then start looking as prices come up into here. If we get some sort of lower time frame, confirmation, we want to be shorting. And it's also super important to manage these trades, understanding that we are in a range. So if we are taking shorts from this top third, then we want to be taking profits at this bottom third, or at least heavy partialing to then start looking for potential buys um, back up again into this top third. Now, obviously, we'd be taking shorts here. Obviously, we get this changing character back down here, so we'll probably be taking longs within this wick. And what happens? Obviously, price gets back up into this top third again, shorten it back down to the bottom third, and again looking for longs to potentially take back up into this top third. Now we don't know whether the high is going to go, the low is going to go, or how long this is even going to go on for. So, you know, we certainly don't want to be staying away from ranges. We want to just understand that we are in this range and how to trade them. At the end of the day, we want to be making money. That's the whole point of this. So if we can start banking profits here and here and here, until we get the breakout and we get some confirmation of what's going to happen, then, you know, we're making money. It's not always about hitting 100R, hitting 50R. If we can start, getting into these trades, understand as well, this is like on a 15-minute time frame. We could be hitting 1 to 10 there, 1 to 10 there, 1 to 10 there, playing this sort of ping pong style trading, as you like to call it, um, you know, and just banking the profits because that's what's important at the end of the day, you know. Um, like I said, I just wanted to cover that. Again, we're going to be covering this in more detail over Zoom, but I hope that gives some value to you guys and you can understand that and it makes sense. Um, I think that sums all that up. Well, thanks for listening, and we'll catch you on the next one.